Hey, TikTok, Jim Malone here. I'm also live streaming on YouTube and on Periscope. The Periscope address is pscp.tv/Dallas Trading Floor, and I will have all of my charts up on Periscope so that you can see them. If you're on TikTok, you might want to jump on over there so you will see simultaneously what I'm talking about on my charts. Interesting day today. It is April 17th, Friday. It is the triple witching day, which means that basically we have stocks that are going to have expiring options. I happen to have expiring options personally. I do have a option that I have sold on on Tesla. I have a 730 option that I have sold on Tesla. It will be expiring today. And that is what the triple witching day is. Triple witching day is, for everybody that doesn't know, it's when the monthly options expire and when also the weekly options expire and the quarterly options expire. So it's a very interesting day. Typically in a normal market, which we're definitely not in, the triple witching day tends to be a day in which stocks will fall, basically because there are all of the selling due to the option contracts coming due. So just wanted to kind of put that out there. It's very interesting. The market has been trending up today. We are currently at 85.71 on the NASDAQ, which has been the leader as of late. We have seen very good movement into the FANG stocks, and as they're calling them, the Nifty 50 stocks, which is kind of dating it. But there's been a lot of selling of industrials in the Dow, and people are moving those into stocks that they think are safer, such as Apple, such as Microsoft, several other stocks like that. I personally don't think there's anywhere to hide in this market. Currently, we are in an uptrend, and that's a great thing. Love to see it, but we are in a situation where we're going to be making I think that the market is going to be reversing. And the reason I say that is because of the sentiment that I've seen on some of my indicators, on some of the indicators that I'm seeing. So I do expect that we will see a change tomorrow. Well, not tomorrow, but on Monday. I believe that the market may be heading down. But who knows? You know, you just never know on this situation how it's gonna run. Basically, on the Spyder, and this is the one that we've been looking at very carefully. The Spyder looks like it's going to make a bounce on the 50-day moving average. It's currently up $4.70, which is 1.68%, which is tremendous. I closed all my short positions. I'm basically waiting to get back in when the Spyder reverses. It's currently not reversed. And if you're looking at this on Periscope, pscp.tv/Dallas Trading Floor, you'll see that the S&P 500 Trust, this is what they call the Spyder, is touching that 50-day moving average line, and that is the line I believe that it's going to start to see. You're going to start to see it move lower from that, but that probably will be next week and not today. Just wanted to go over something interesting here, and that is the put-call ratio. This is a psychological indicator on the market, and it basically indicates when the sentiment is either bullish or bearish. Currently, as of today, it's 0.81, which is actually a bullish number. So we're seeing it under 1. Now, when the put call ratio goes to 1, that is the beginning of a bearish indicator. Currently, as of today, it's 0.81, but it has been trending lower. So this is a very hard market to figure out. There's a lot of hope that Gilead Sciences product remdesivir will be a possible treatment for the COVID-19 virus that's been causing such panic in the market. But we just don't know. I think that's part of the reason that the stocks have been trading up today. I also believe that there's going to be a rotation out of certain stocks. One thing I want to bring up here is, and I don't know if you've seen these stories or not, but it looks as if Warren Buffett is going to get his clock cleaned. He is losing literally billions of dollars in the market, mainly because he's a value investor. And this is a word of caution. Value investing looks good on paper. You want to buy something cheap, you go in there and you're like, wow, it's cheap, I want to buy it. It's not really a good strategy because those are the ones that get hit the worst. Warren Buffett, Berkshire Hathaway, is heavily invested in things like hotels, restaurant chains. He owns Dairy Queen, and other things like that. That insurance, things that people just don't pay for a lot of times when it gets tough on cash. So it's really value investing. I am not a value investor. I am what they call a momentum investor. I'm always trying to invest in the way the market is moving. If it's moving up, I tend to be bullish. If it's moving down, I tend to be bearish. And if it is going sideways, I tend to sell covered calls. That's sort of a strategy that's served me well over the years. Right now, we can't really tell, but it looks as if we are still, the market for some reason is still in an uptrend. I expect that to break because of what I was saying about the Spyder hitting the 50-day moving average, and currently, as you know, it's as I said earlier, it is selling in the Spyder is at 283 in that range. I do believe it's going to reverse currently, but I do not have any shorts on it. If it reverses below the 50-day moving average, which is about that level, I probably will be a short on the Spyder. Another thing I want to show you very quickly, I have a chart here. It's the bulls versus the bears, and this is kind of where the VIX comes from. I think you've probably heard of the VIX. It's sort of a psychological indicator as to what the volatility on the market is currently, and this is very, very interesting. The bullish sentiment amongst the financial writers has actually trended up, but it's now trending down, and the bearish the bullish sentiment has trended up actually, and the bearish sentiment has trended down. Currently, in the financial press, approximately 40.9% of the editors are bulls, and the bears are about 32.4%. I'm definitely in the bear camp at 32.4. I believe that you're going to see next week. I think we're going to see a change in position there, where the bears are going to be stronger than the bulls. But we'll see. I mean, it just depends. There was a very interesting tell today. There was a call on Apple at 233, I believe. That pretends that the market will move lower because people are piling into Apple, but I don't think that's a good safe haven, to be honest. I also want to show you on Periscope, pscp.tv/Dallas Trading Floor, the chart for the Invesco QQQ Trust. This is the NASDAQ 100 tracking ETF, and it is significantly above its 50-day moving average. This is actually very bullish. But I believe what this is, and this is just a guess on it. Obviously, it's always just sort of a guess because it's a real-time thing. But my guess is that it is moving in a direction where many of the people are seeking shelter in some of these high-cap technology stocks like Microsoft and those kind of stocks. And we're seeing it move up. It's up 0.72% today. Very, very, very bullish, actually. So again, but I do think we're in for a reverse here very quickly. Also, I want to point your attention to the inverse ETFs, the SQQQ. which is basically the inverse of the QQQ. It basically takes an inverse position. It is down today, 14 cents. So you don't necessarily want to be in this ETF right now, but when there's a reversal, you want to probably look at this one possibly to go long on, because it operates inverse to the QQQ, the NASDAQ 100. And so when the market goes down, this typically goes up, and it's leveraged, so it goes up typically about 3 times what the market is doing in terms of the volatility. So this one might be one you want to look at when the market turns. The market has not turned right now. I am currently long, but I'm long on only one stock, and that is Tesla. And Tesla has actually gone up out of the last 9 sessions. It's been up 9. So there is movement into some stocks. Again, the only stock I'm in currently is Tesla. Everything else is cash. I also wanted to just kind of briefly go over the IBD 50, the top 10 list. The number 1 stock right now in terms of momentum is Netflix. No surprise. Everyone's staying home and watching, reruns of, Breaking Bad and those great shows that they have on there. The number 2 is Vive. It is an interesting company. I have invested in this in the past. What it is it's a company that has a cloud-based drug trial platform. They have about 85% of the market for drug trials. Obviously, it's doing well because of all of this development work on COVID-19 issues. So they're doing very well as well. It's up $1.30 today, and it's trading quite nicely at 176. Anything else really on the list? Of course, some normal ones: Adobe, Microsoft, NVIDIA. Now, I do believe we're coming up onto a period where we're going to start to see some weakness in some of the FANG stocks. The one I'm particularly keyed in on is Apple. I am looking at Apple as a potential short, but not now. It probably will be several weeks, but I may be going short on Apple just because everyone has piled into the stock, and I don't think it can. It showed an announcement that its sales are going to be significantly off next year. So that's how they're trending. So I think it's a potential short, but I have not shorted it yet. I'm going to try to put out to everybody kind of what I'm thinking about in terms of my watch list for shorting stocks. Again, Tesla, just wanted to show you the chart on this. It's up pretty strongly today, trading at 763.53. It's above the 50-day moving average. Again, it's the only stock that I'm in currently. And I will be selling at the end of the day because I have an expiring option, a 7:30 call. I took a pretty conservative position. I purchased the shares for 7:30. I then sold the option, the 7:30 option. So basically, I was betting that it was going to go nowhere. It went up, which was great, but I collected the option premium. This is a safe way to sell a stock in time of a lot of difficulty, is to basically try to extract the profit from the option sale. And that's what I do. I'm typically, if you're in options, typically 70% of the time, if you buy an option, you're going to lose. If you're selling an option, you're going to win. So that's just kind of an interesting thing. Where would you buy options on Hess? I wouldn't buy options on Hess right now. The only options I would consider on Hess would be selling puts. I wouldn't do that. I think the oil market has not bottomed yet, and I think it's a dangerous game right now to do it. I know that I'm not trying to burst anybody's bubble, but I just think it's very difficult to be in that. This is a chart of Apple here. It's above the 50-day moving average. Again, I believe that this is going to see some movement to the downside. As you can see, it already has. It's trading at 281. There was a call today for 233 on the stock, which would imply almost a $50 stock of a share drop. It's dropped $5 today. I think next week we're going to see a lot of weakness in the stock, and I may be a short. But again, I have to make that decision over the weekend as to what I'm going to do. And basically, in all the sectors are up today, which is interesting. But I do think they're going to have some weakness. Thank you for let me go through that. Okay, taking questions. Since the MRO is above $4 with an $18 crude. Yeah, this is a really the plays on oil are very interesting. Let me just look here. Let me look at a chart on this MRO. Let me look at this chart. Okay. Yeah, this is Marathon, obviously. Good. One of the kind of what I would call super. It's not one of the majors, but it's kind of it's kind of in the mid size there. It's trading. Wow, this is a tough range. Its low is $3. It's trading for 422. This is potentially a. I don't think this is a short. There just isn't enough left to short on it. Let me look out here. I'm going to look out about a month in terms of the options to see what the options are selling for. These are pretty cheap options. The 450 May 8th call is selling for only 35 cents. But considering the value, that's a fairly high return. I wouldn't be a seller of call. I wouldn't be in this stock. I wouldn't be in this Marathon and I'm going to take a look at Hess, but the other one's just not very good, unfortunately. Goldman Sachs also said that Apple. Yeah, I agree with that. I think Goldman Sachs that's a good call on Apple. I think what's happened in the last few sessions is that a lot of people have been piling into Apple. I mean, it's a great stock, but they've been piling into Apple, but the problem, of course, with that piling into Apple is that it's going to get overvalued, and I think we're going to see some weakness. A lot of times, what will happen when they get these market panics is everyone is going to look around into the market to see where the longs are and go there, and just go there, and then when that happens, what will happen is that the smart money then will start selling and left the retail buyer, unfortunately, holding the bag on that. And I think that's going to happen with Apple. Everybody owns Apple in all the big funds, all the technology funds own it. Again, it's a great stock. It's not going out of business anytime soon, but I don't think it's going to have the kind of quarter that it had previous. I just don't. I can't see that happening. Even though all the sectors are up currently today, I believe that we're topping on the current rally. I think this was a relief rally. I believe that next week you're going to see some of the pain start, and that you're going to see you're going to see a reversal probably by the end of the week. But who knows? It's very hard to call this. But I do believe that they're going to start to see some weakness, and I think we're going to go down and test the low. And of course, where I'm calling the low is where the Spyder hits its March 23rd low of 218. If we go down to that, then we have probably put in a bottom. But right now, we have not put in a bottom on this market. Okay, your Tesla position is it's pretty good. I made a few grand this week on it. Very nice. Again, I wasn't. I figured it would be good. I mean, Tesla is sort of the future of the automotive industry. I wouldn't touch anything else in the automotive sector, to be honest with you. I think everything else is weak. But here's the thing about Tesla. They've got $6 billion worth of cash. They've got a full order book. And even in a absolute depression, there are going to be people that are going to move to the autonomous vehicle, and they're the leader. And they have about a 2 to 3 year lead on everybody else. Everybody's trying to get into this business, Volkswagen, all that stuff, but Tesla has a tremendous lead on them, and I just see the world going that way. And I'm talking to you here from Dallas, Texas, which is a big oil state. So even here in Dallas, they're everywhere. It's just I just believe it's gasoline cars aren't going to end tomorrow, but I do see that there's going to be a lot of movement towards the electric vehicle and products that are based on the electric vehicle. Things like NVIDIA, for instance, which does a lot of the AI chips that are going to be in every Tesla. I mean, Tesla is basically, like they say, it's a car running around collecting information on various things and then uploading them at night. So it's not just a play on transportation and autonomous driving. It's also sort of an awareness play where, we can be aware of just about every condition where they have Teslas. So it is really, I believe, the future, and I think the market is starting to see it as such. So I do believe eventually, not now, but I think it will be over $1,000 a share. I don't think it will be this year or next, but definitely in 2 or 3 years, you're going to see that stock over $1,000, in my opinion. I think too much of this on Cure. Yeah, absolutely. This RJC 56. This is really good. By the way, just going to this is a TikTok viewer, RGC 56 for the people that are on YouTube and on Periscope. I do believe that there's far too much enthusiasm. I wish, I would like to see it. That we have a cure to this thing, because it's a scourge. I mean, it's an absolute scourge. But I just think that the market is too enthusiastic. Also, you've got to understand what's happening. A lot of people, they don't want to go to all cash. They've never been in all cash. They don't want to go there. They're afraid of that. So they want to find something to invest in. So what they're doing is that, they're saying, oh, well, I've lost money on the retailers like JCPenney and Macy's and all that stuff. I'm just going to sell, but I'm not going to take the money out of the market. I'm going to go and buy an Apple or something like that. I think that's a fool's errand. I think there's a few places in the market where you can be, but there's just not a whole lot of places that you can be in a bear market. And I think we are in a bear market, though we're in a relief rally on a bear market. I think there's really only two things you can do in a bear market, and that is invest in either in cash or potentially in shorting a stock, which is basically selling it and then buying it back later at a lower price. That's where I think that we're going. Imagine if the SPY climbs back to 320, 300 price, and everything continues normally. Wow, that would be great. I would love it. I would so love it if the Spyder went to 320, because if that were the case, then we wouldn't be out. We wouldn't be into this scourge. I mean, here's the problem with this. This is just the weirdest thing. Of course, I've never lived through anything like this. Demand has totally dropped for certain industries. Like yesterday, the chairman of American Airlines came on, and he basically said, look, we have lost 90% of our revenue. Now, people haven't realized that yet, but 90% of your revenue, I mean, I don't think that's sustainable. They're going to have to start laying off people. They had somebody on today from a company that owns franchised hotels in the Midwest, and basically they have in their full service hotels zero, nearly, well, I don't think it can be zero. I don't know how it could be zero, but zero bookings. All right. So they're going to have to lay off all their staff. They're going to have to shutter the properties, and they're not going to be able to make their mortgage payments. Yes, they're putting on a happy face and saying, yeah, we're strong and we can make all these mortgage payments, but I don't think so. All it takes is a few months of that, and they're done. And anybody that's giving them a credit line now, unless they have government backing, is out of their minds, because they're not going to be able to pay it back. New York Como said he would take 12 to 6. Yeah, exactly. If California and New York is closed, most of the rest, I think it will be affected. But here's the thing. I mean, the economy's, even though we're closed here in Texas is going to reopen. And, I think that Texas is going to reopen because Governor Abbott basically is taking a sort of an independent view on that. And if Texas reopens, the movement of the financial industry will be here to Texas. It'll move because I think that's going to happen. And that's the reason why everybody's jockeying for position, because Texas and California know that if they don't reopen, every day they reopen, they're going to lose business to places like Texas that are going to open earlier. I know that's harsh, and I don't really I don't like that, but I think that's going to be the reality. I think we may see a major shift out of the major coastal cities in terms of some of their employment to areas that are less affected or less dense. I just think that it's going to happen. Let's see. Yeah, totally. I don't see how things. Yeah, we'll see. I don't think so. I don't. I mean, I think that this is a false rally. Now, have I been wrong in the past? You bet I have. But um, I don't think we're going to continue on this upward trajectory. I think this is a relief rally. Um, when these numbers start coming in, I just don't think it's going to be good. I can't see it being good. I can see just carnage in certain industries like in travel and leisure. The airlines are going to be hurt. Some things will do well, but most won't, and that's just where I'm at on that. Let's see, how is Gush going up? Oil dropping. Well, let's take a look at Gush again on my little thing over here. GUSH. And I'm sorry I turned away from you, but when I do that, I'm actually looking at another monitor over here. It's strong today, 23. Very nice. Up $2 a share. Yeah. This is good. This might be this is not bad. It looks like it's trading to the top of its range. It looks like it may be making a move to the upside. From it basically started today at about 21. It's up to 23, and on a stock that in the ETF that's in this price range, that's a tremendous move. So that's pretty excellent, actually. I think the reason that Gush goes up as it's falling is I think that there's a lot of contrarians out there that think that we're going to get there's oil is going to put in a bottom. I think that that's how the market is going to bottom. I think you're going to see oil firm up, hopefully above $20 a barrel. But once oil starts firming up, I think that's the beginning of the bottoming process in the market. But we're still not there. We're still not bottomed in the market. So it's just one of those kind of things that is a issue because we're just not seeing it in terms of in terms of the market. So there you go. All right, let's see. I think it's really hard to say if Gush is a buy. But if I were going to be in Gush, and I'm not in Gush, just for full disclosure, I would buy it here. I would set my stop losses. I would be in it up to about 27. I'd be in it from about 23 to 27. I think you might have 4 points there to make on a swing trade. I do think though that you got to be careful because I do think the markets are going to reverse next week. I don't know when. I think there's going to be actually a lot of fairly good market action today because it is a triple witching day. But I think coming Monday, I think that there's going to be a movement. People are going to try to sell, and I think the market is going to move lower. But again, we're not there yet, so it's not a time to be short yet. Is Netflix a buy today? It reports Thursday. You know what? I never. Now here's something that I've learned over the years, and I'm just, I never play a stock into earnings. I don't like to hold stocks into earnings, and I'll tell you why. Because depending on it's totally unpredictable. The market may totally move the stock higher, but it also may move it lower if it doesn't meet its earnings. It's just too risky to hold it into earnings and take a new position. A better way to do it is to play it with options, and that is before earnings. If you are bullish on the shares, and I think Netflix might be in that category, you might want to buy calls. You might want to buy calls on it. That would be how I would play it into earnings. I would buy calls maybe 30 days out. But I typically don't like to take a position in a stock before earnings, and I typically sell my positions before earnings. That's my normal thing because earnings can be very unpredictable and they can go either way. It's easier to limit your losses potentially by buying a call, and that's one of the few times I do buy calls. Did you see CXX? Yeah, look at that. That's Chesapeake, right? CHK. Let's take a look. I think that's Chesapeake. CHK. All right. HK. Yeah, Chesapeake Energy. Yeah, Chesapeake is really interesting. I don't know if you know this, but the former head of it, look at that. Wow. Weird. Okay. That is interesting. Somebody's going to buy them. Yeah, yes. It went from almost like nothing. That is really interesting. It went from 18 cents to $19, something's afoot. I don't know if you know this, but this Chesapeake is one of the companies that had some of the most fraud, and the former CEO of the company committed suicide. This company is cursed, but it looks like somebody's going to be acquiring them. That's usually why you see that kind of movement. When people run out of money, yeah, they won't be able to afford the streaming services. Well, here's the thing. Here's the thing. I believe they're going to cut cable. People are going to cut cable, but I don't think they're going to cut their internet services. Um, and besides, AT&T and Charter and all this, they own the streaming services. They own the internet connections too. So people just are not going to now. They are probably going to continue those services. Now, rent and stuff like that. A lot of states like California, my home state, I'm from California originally, is basically saying, hey, you don't have to pay rent. Well, those chickens will come home to roost. Believe me, they will. So I do think that's going to be one of the last things people cut is cable and the internet, because it's so dependent. Everybody's so dependent on it now. So I do think that's the case. Long put vertical for Apple. Good question. Boy, that's a really good question. Do what I want to do a long put vertical? That's not a bad move. That's not a bad move. I can't give you an exact numbers on that, but I think that's a smart. I think it's really smart actually. I think you're going to see Apple move lower over the next month or next 3 months. So that might not be a bad trade at all on a long put. By the way, for everyone out there, just wanted to kind of give a heads up on what a long put is. Well, typically, you can short the market directly like I do, but you can also purchase puts, which allow you to basically sell it at a set price in the future. And this is a very good way to play the downside of a stock that you think is probably going to trend lower, and to move out, maybe at least 3 months and maybe even a year. They have these long puts, and they can be very profitable if you think the stock is going to trend lower. And I think Apple is going to trend lower. I just don't know when. I mean, right now it's pretty strong. There's a lot of people in it. It's a great company, but their demand's going to go down, and I do think that might not be a bad play at all. Made money. Oh, hey, excellent. I made money on the first one. Yeah, excellent. One called vertical and text. Again, excellent. Really, really, really good move there. That's a smart way. That's a smart way to play Tesla. Again, it did. There was a blow off top. I was long Tesla up until in mid-February, when I sold out. I basically sold my positions at 900 and 875, and then I wrote it down, and then it rode down, and then I've been re-entering this, but really carefully. I've been re-entering basically once it moved above 580. I've been able to make very good money on Tesla in the last few months. It's been a very good stock for me because it's so volatile. But I think that's a really good move. Long call. It's awesome. Okay. Let's see. View on Boeing. Oh goodness, boy, this is a really tough one to play. I was shorting Boeing at the end of March. I was short on Boeing. I think that I think Boeing is going to be moving lower. I think it's a short, but there's a caveat here because it's such an important company in terms of the Dow. It's the number. By the way, for anyone that doesn't know this, Boeing is the largest exporter, U.S. exporter, and it accounts, I think, for something like 10% of all exports. It's just incredible in terms of, and so it will be supported by the government. There's no question about it. But I don't think that's going to be great for the stock price because, in terms of the equity holders, I don't necessarily think they're going to do better. But it is up today, trading at 150, and the ranges are less. This might trade up as high as 180, but I think that the long term on this is going to be down. The low on it, of course, was made basically on March 17th, and that was 89. If you can believe it. So I do think that it's, from these levels, I don't think it can maintain the 150 level. There's not the profitability there. But, I could be wrong. You can always be wrong. But I think that it is a relatively, in the midterm, I think this is a short as well. But this is a tough one to short because the government will come in and back them. There's no question in my mind. And if they do, it's going to be much harder to, it's just going to be much harder to call it. That's just the way. Okay, we have some people up. I'm going to take a call now from. Let's see. I'm going to take a call from. Okay, I don't know if okay. Let's see. I'm going to take a call from YouTube. Do you believe in Fibonacci levels? Seen people saying SPY could hit 291 and begin start dropping. Yeah, here's the thing about Fibonacci levels. This has a lot to do with, this has a lot to do with how this is called Elliott wave theory. It comes from this thing called Elliott wave theory, and that is that there's these reaction rallies tend to reach certain levels. I do think that there's some credence in it. We may go as high as that. I really thought that the key support level would be put in at 275, and we moved past that. So it may be a while before it retreats, but once it starts retreating from those kind of levels, I think it's going to move down, and I think it's going to move down very sharply. So thank you very much for that question from YouTube. What's your opinion on Forex trading? Well, here's the thing about Forex trading. I'm not primarily a Forex trader. You can do very well on Forex. The biggest problem with Forex right now in this environment is that we have a artificial dollar that they're just pumping incredible amounts of liquidity into the market, and this is affecting the Forex market. You're seeing really it's sort of out of whack because people are having to come in and buy dollars. Some of the weaker countries, in order to get access to the markets, are having to come in and buy treasuries or sell treasuries to get the dollars, not because the value is there, but because they need the liquidity. And now it's true the Treasury Department has put some credit utilities in that help countries with this problem, but you have also rogue countries like Venezuela that don't have access to dollars. So Forex trading is very political at this point. You can do very well if you're on top of it. I'm personally not a Forex trader, that is basically the situation. I think you can do. I think it's easier to deal in equities right now, and I think there's more juice in equities than there is in Forex. Okay, let's see. Getting back to a question that I probably skipped over. Okay, CHQ. Yeah, I had a reverse. Yeah. Had a reverse on stock shares, which is why they're up. Okay, that's really interesting. Okay, had a reverse. Okay, okay, that makes sense. Okay, thanks for that. By the way, I just want to call out Furious One. That's really good. I did. It's when you see a movement like that on the stock that is so down, like Chesapeake, something's got to be up because it just normally doesn't work that way. It just doesn't. I mean, that's just a fact. It just doesn't work that way. It doesn't move. The market doesn't move that quickly, that fast on a stock like that. So that's very interesting what you're saying. Okay, reverse split. Okay, super. Yeah. Okay, well, that makes sense. Now, what is a reverse split for everybody out there? And I know this is when stocks crater like this and they go down and they're trading under $1 a share. There are many exchanges, the New York Stock Exchange being one of them, that doesn't allow it to continue to be listed on the exchange if they trade below $2 for I think it's 1/4 or something, 1 or 2 quarters. I can't remember exactly the rule, but what will happen in that case is that you find companies that, in order to keep their listing on the stock exchange and not go to the pink slips, what they'll do is they'll do a reverse merger. So if you have 5 shares, you might get 1 share of the new share. So that's why they're trying to move that up. That's probably a short, because once those things start trading, they're probably going to trade down even after that. So this is really a movement to try to keep listed on an exchange and not go to the pink slip status. And you're going to see a lot more of this. You're going to see a lot more of this as the markets deteriorate. Where do you go, John? Okay. What are your go-to companies to invest in during a pandemic? Well, actually, my go-to stock right now is cash. You say, why cash? Well, because actually we are in a deflationary cycle right now. Now, here's what happens. When demand is withdrawn from the market, and definitely has been by this pandemic, people aren't spending, they aren't going out to restaurants, they aren't working, so they're not getting cash. So what people are doing now is the people that have cash are hoarding cash. And what they're doing is this is taking demand out of the system. Well, this creates deflation. That means the value of cash is increasing. So that's my default mechanism, is to go to cash. Interestingly enough, I saw an article about Mark Cuban, and everybody says he's a lucky guy, and he is, but he also works with Southwest Securities here in Dallas, and they are some very shrewd traders, because he made $2 billion on Yahoo stock years ago by doing a maneuver called by doing an options play that was just brilliant. He's basically going all cash. And the reason is because in a down market, in a bear market, your best bets are typically to be all cash or short. And that's really the way it is. Is it the right time to buy Abbott? You know what? Here's the thing about the coronavirus stocks like Abbott, Gilead Sciences. I was in Gilead 3 weeks ago. I'm out of Gilead right now. Abbott is a good company, but I do think everybody's trying to pile into these stocks, and I don't necessarily think it's where you want to be, because I do believe that, depending on what happens, if there's a disappointment, you might see these stocks reverse very quickly. Now, that said, if you're going to play this space, I think you want to play the ones that have the best balance sheet, and that's Johnson & Johnson, J&J. That if you're gonna look to that sector, to the healthcare sector, that's where you want to probably be. It's down a little bit today. It's at 151. Let me look at the options on it to see. I always look at the options to see how the thing is, see what the sentiment is. And it looks to the sentiment is fairly strong. Yeah. The 152.50 May 8th call is trading for 389. That's very good at a 151 level. So that's where I would go. Investing long in stocks right now doesn't seem like a good decision. I think you're right, Bobby. I really do. It's just, the thing is, it's a very hard market to go long on. Again, most of my long, quote unquote, long positions are very short. I mean, I went long on Tesla on Tuesday, buying it at 730, but I'm closing out the position today because I've sold an option. So, cash is my favorite investment right now until bottom's put in on the market. Now, how can you benefit when you're in a situation like this? Well, the way you can benefit, if you don't have the capability of shorting stocks in your account, you need a level 3 authorization for that. You can use these inverse ETFs, and they're great because they allow you to do essentially what everyone else is doing, but you don't have to have the requirements. You can do it in a 401k all that kind of thing. And those inverse ETFs, like the SQQQ or the PSQ, they offer a very good way to go, because those you don't have, again, you don't have the requirements. You can buy as little as 1 share of them, and it allows you to participate in the market on the downside, which is very hard. 95% of the people out there are not going to go short, and they're going to lose money. That's what happens in every bear market. So this is a way you can go short even if you don't have the capability in your account to do it. I am planning to buy Microsoft, but waiting until it goes down. That's a good idea. I think Microsoft, I love Microsoft. I've been trading, I started trading Microsoft about 3 years ago when it was at 68. And I made a ton of money on it. I'll be honest with you. It is a quality company, but I do believe it's too high. It's the bid right now is 177 on it. I do think you're going to see its top. Okay, what I think is right now it may be a long. Yeah, it may be a long up to about 190, but I wouldn't hold it beyond that. It really is not in a buy zone right now. If Microsoft goes to 190 and beyond it, then it's a buy. Right now, I don't know if you want to be in it long in this kind of a market. But again, I still could be wrong. It's down a bit today, but it's been up in this week. So it's a quality company, and Teams are just doing great. It's gonna be the de facto platform for a lot of people in the corporate space going forward. So it's really good. SQQQ and other inverse ETFs are lower than they've been in a month. I definitely definitely want to watch those, because I think you're going to see a move. I wouldn't be long on the SQQQ today, because I think we're in an artificial uptrend. But come Monday, I think you want to be looking at that SQQQ. If it makes a move to the upside, I think you want to jump in it, because at least for a day or two, because I think it could move very high, very much higher, very quickly. But that's kind of like a hot potato. You can't be in that for a long period of time. But when it reverses, it typically, especially in this market, is good. USO ETF. Let me look at that one really quickly here. Yeah, okay, great. This is the oil fund, U.S. oil fund. It's trading at 418 right now. Let me see if I can pull a chart on this one and get a better idea. Okay, yeah, this is interesting. This one is very interesting to me, because I believe that we may have put it in a low. It's low on this now. Did it retest? Let me just check. Okay. You know what? This might be a buy, and here's why. It put in a low on March 30th of 403, but with light trading volume. So this may have bottomed. This one may have bottomed, actually. This one's definitely a watch list. I wouldn't go long on it now, but this one definitely looks like it's bottomed. Thoughts on DNJR? Let me look at that one real quick. DNJR. I'm not familiar with DNJR. DNJR. Okay, very interesting. It is Golden Bull Limited. Wow, I have no idea what these guys do. Is this a junior gold miner? It probably is. Yeah. Oh, look at that. Lots of volume. Yeah, somebody's buying this. Somebody's buying this, but it's moving down. Yeah. This is a junior gold miner. Okay, now hear about the gold mining stocks. Right now, we are in a deflationary period. A lot of people are buying gold, and they're being very disappointed because gold isn't going up as fast as they'd like it to. But I do believe once this deflationary period is over with, and typically that's how it works. And the reason I know this is because I've studied the economy of Argentina, where you have these inflationary periods, and then when it reverses hard, and it becomes very inflationary. But right now it's deflationary. And gold, people are trying to get into gold, but it is trading down because there's tremendous demand for dollars. But these junior gold miners, typically in an inflationary period, are the way to play it. We're not there yet. This is definitely a watch list, though. I think we're going to, by the end of the summer, we want possibly to move into some of the golds because they may be good. And there's a really good fund, I believe, that covers this very well. It's GLD, and it is, but not right now. Again, this is a weird period of time. We're in a deflationary period. Cash is king, and so really, right now, it's time to be short. It's time to be in cash, or time to be very, very short on the long. It's just one of those things. Are you recommending? No, I'm not. I'm not recommending a buy on the USO. I'm recommending putting it on a watch list. I want to see USO go higher before I be comfortable buying this thing. Let me just take a look. It definitely, it's definitely in the mode. But here's the thing: I want to see confirmation on this movement, and in order for me to buy this, it would have to be trading above 507 for me to do it, because it has to show confirmation that it can make the move above that level, because that seems to be where the resistance is. There is another piece of resistance here at 6. Really, you don't really want to be buying this. You don't really want to be buying USO unless it closes above 6, because that is resistance, at least short term. Resistance is about 6, so it's not probably where you want to be. Are you recommending? I would, here's the thing. I like to sell options. I typically like to sell options rather than buy them, and the reason I do, and this might be a good way to play it, the reason I do is because typically most of the options, most of the time, buying options, you're only going to make money about 30% of the time, and if you're selling them, you're going to make money about 70% of the time. So it's a better trade to sell them. If you think the stock is going up in the future, then you want to possibly go with the stock and then sell a covered call against it. It's a more conservative way to trade it, but it tends to have a better likelihood of success. And that's how I trade. That's how I traded Tesla this week very successfully. And this might be a way to do it on USO. So just a thought. Most of the daily moves have been, happening before the market opens. Absolutely. Yeah. Predicting his stuff and call. Absolutely right. The reason there's so much action in the aftermarket is because you basically have funds that are buying and selling positions, and they don't want it to hit the general market and destroy the price. So that's the reason why I think it's time to be very cautious, to be in cash, and look to be short rather than long in this period, because what's happening is that they're trying to get everybody confident to go back in and buy long. And what's going to happen, of course, is the retail investors are going to go in, they're going to buy long, and then the big funds, the Goldman Sachs of the world, they're going to sell, and they're going to leave people in a bad shape. So this is why you have to be very careful in this kind of market, because it's not a good long market, and that's why there's it is very hard to predict anything. I agree with that totally. I typically don't place my positions until I look at the overnights from Europe, and even then, if I don't get the right if I don't get the right motion, like for instance, I closed 2 short positions this week on the Spyders, 2. Because the conditions look good when I came into them. It moved against me. I closed the positions. I'm closing positions now when I'm shorting at 1% and 2% above where I paid for where I sold them. So I'm being very conservative, and I'm keeping my losses. If I get the direction wrong, it's a hard market to figure out what the direction is going to be, because it is being manipulated so heavily right now. So it's really tough. Let's see. Hey, by the Saber, thanks a lot. Thanks for saying hey. Let's see. Okay. Let me see if I have another question. Okay. SQQQ, yeah. Let me take a quick look at what the PSQ is doing. That's a little bit easier one to short for the short. The biggest problem with the QQQ is that it tends to move. Yeah, it's up today. Okay, this is interesting. This is one you might want to put on your watch list or potentially buy. It's called the PSQ. It's not leveraged like the SQQQ, but it works. It moves against the market, and it is currently up today. And this tells me, with good volume, this tells me that people are hedging their positions probably into the weekend. And it looks like it's at the low of its trading range. This is really interesting. I think we're going to see a reversal early in the week based on this. Its low was 21. It looks like it traded this morning very close to its low. I think we're going to see it move up. So this one we might want to. Matter of fact, I'm going to put that down on my list. It's called the PSQ, and it is a inverse ETF, but it's only one time, and it's a way that you can take slightly larger positions than you're going to take in the SQQQ. Now, let's see, and with safety, most of the daily moves. Okay, but okay, let's see. Okay. All right. What do you think of COP? Yeah, this is COP is ConocoPhillips. It used to be a great company. It's up today 34. I just wouldn't be in any of these oils right now. Right now, it's so tempting because these oils are trading very close to their asset values, but it's just such a tough market to trade it in. I wouldn't be a buyer yet. Here's the thing: if you want to be exposed to the oil market, if you want to be exposed to the market, I think it's safer in this environment to look at trading the sector ETF. And the sector ETF for the oils is the XLE, and it's been the top performer this week. They have a basket of these stocks. I think trying to pick winners and losers in this market is very tough because we have oil that isn't, we have oil under $20 a barrel. The question is, where is that gonna settle? I think that a safer way to play it in this market. Normally, I don't recommend this. Normally, I recommend picking individual stocks, but I think that this one, if you want to play the energy sector, and it has been a good play this week. It's been up, it's up significantly. Would be to look at the XLE instead of COP, which is an individual stock. So that's just good. I think the best oil ETF for broad exposure to the market is the XLE. That's my personal favorite because here's the reason I like the Spyders. They tend to be very, very liquid. So if you have to get out of the position, you can just sell it. Boom, you're done. I mean, literally, you can just be sitting there on your iPhone and just go sell, and it's done. Some of these other ones, not so much. You might be trying to sell for 5 minutes, and the thing might be diving. So, in this kind of market, liquidity is king, cash is king, and I really like if you're going to play a movement on a sector. Probably best right now to use the ETF, the sector ETF, and that is the Spyders, and I typically like them. So that's kind of the way forward there. So everyone, it's almost been an hour. I so appreciate your time. Here I am job owning with you, and I just really, really enjoy doing this show every day. I am going to try to put out some more information. This weekend, I'm going to try to come up with at least somewhat of a watch list that I can put out to everybody. And I'm going to try to do. I haven't got my MailChimp up and running yet, but I'm working on it, and I'll hopefully have it this weekend. But if you want to be on that list, just to get alerts, it's just go to DallasTradingFloor.com. Just put your email address in there, comment section, and just I'll try to put you on the list for that so that you can get those alerts, and again, it'll be MailChimp so that, if you get sick of it, you can just cancel it and get rid of it. So thanks again for everybody. I just love doing this show, and hopefully I'll put up some of my results on there as well, just so that you can see that I'm not totally, bullshitting you. So anyways, good to talking, and have a wonderful weekend. Be safe. The COVID-19 thing, unfortunately, is real, and just be careful out there, man. See you on Monday. And for everybody looking on